Welcome back to America's Commercial Real Estate Show. I'm Michael Ball. This segment is brought to you by BOMI.org. That's BOMI.org. They are the trusted source for education in the property management and facilities management industry. And today we are talking about medical office buildings. You know, and it's interesting, I like to get the analyst and the economist view on things, but I also like to talk to a developer, an owner of properties, or a broker who's someone who's in it day to day. Please welcome my next guest. Is Paul Zeman, and Paul is partner with Bull Realty, and he's also president of Healthcare Real Estate Services at Bull Realty. He's joining us in Studio One. Paul, thanks for being back on the show with us.
Great. Enjoy being here.
Well, Paul, just briefly, so the audience kind of knows who I'm talking to here, how long have you been selling medical office buildings?
I have been selling medical office buildings 11 years now, and prior to selling medical office buildings, I was a healthcare provider in the outpatient diagnostic imaging sector with a company local to Atlanta, and actually come from a family that's full of doctors and nurses. In fact, I broke the mold in my family when I decided not to go to medical school.
So that's interesting. So you kind of understand the healthcare field, right, and how these physicians kind of work off each other and how they work together?
I have, in a synergistic effect that different specialties may have with each other. The constant and daily battles that they're fighting with Medicare and Medicaid and private payers and reimbursement, and yeah, I lived that life for a long time.
Yeah, and I think it's interesting. I've heard you say before that medical offices is just like office, but it's
it's complicated. It's a very complicated office. Yeah. We have CONs, yeah. We have LNRs, we have many more use restrictions. Yeah. Some very extensive build-outs for things like imaging centers, surgery centers, oncology centers, a linear accelerator, you name it. It's very different than just a typical office.
Well, good. Well, Paul, you're talking to owners of office buildings every day, buying and selling these medical office buildings. So, and it seems like we're at a little bit of a turn in the market. We're starting to see interest rates rise. So, is it a seller's market or a buyer's market in the MOB space?
You know, that really depends. I'll say that the demand is still as high as we've ever seen for quality medical office. So if there is a real high quality medical office in terms of construction, but also in the tenant makeup and the credit, proximity to campus, things along those lines, it's definitely going to work in the seller's favor. However, the buyers are not just laying down and buying everything that's out there. They are dotting their I's and crossing their T's, and they're being very careful what they pursue.
Well, let's talk about that for a minute, because how are lenders and buyers really underwriting today? Are they, you say they're more cautious? You
know, for some of the smaller buyers, some of the smaller private equity out there, and some of the high net worth individuals that are obtaining loans to acquire medical buildings, I have recently seen the lenders being overly cautious. Was working on a deal this morning, in fact, where I saw a lender request tax returns for all of the other medical buildings in this individual's portfolio, and that was a new one. In terms of the buyers and how they're underwriting, I'm seeing the buyers are tending to be a lot more conscientious of market rental rates and vacancy rates, and of course the lease term, the structure of the lease, escalations, things along those lines.
Okay, and let's talk about cap rates, because again, you know, we're starting to see interest rates rise a little bit. You've seen strong demand for stable healthcare properties, right? So how is that trending cap rates?
You know, in the world that I work in, really taking a hard look at medical office buildings that are greater than $5 million, preferably $10 million and up, that are 100% occupied, might have some hospital sponsorship, even off campus. I'm seeing cap rates are still hanging mid-sixes, 6.5%. In fact, the first quarter of 2018 was as low as 6.3.
So is that fairly flat? Is that what you've seen for a while
That
now?
is what we've seen for a while now, but we've seen 75 or 100 basis points increase from the Fed over the course of the last 12 months or so, and I believe that that tide is going to turn. I think that we are going to see an increase in cap rates on average. Obviously, the trophy assets or the very high quality with a compelling story will certainly continue to do better.
Yeah. Well, let's talk to buyers if they're out there, maybe they're in another sector or they'd like to get involved in medical office buildings. What advice would you have for them?
I would say that if there's a new buyer coming into the sector and they want to pursue that $5 to $10 million medical office building, $12 million medical office building, that it's a great place to be. However, if they're really trying to pursue the 15 and 25 million, 100 million, and their investment criteria is more want a hospital building on campus. We want it attached to the hospital. It needs to be sponsored by the hospital. They're jumping into perhaps one of the most competitive sectors of commercial real estate. They will, in fact, be competing with the multi-billion-dollar institutional investors that are also pursuing those properties. So
they're going to see some pretty low cap rates there.
They're going to see low cap rates, and they're going to see fierce competition.
Yeah.
Absolutely.
Well, Paul, what about physicians that maybe they're interested and they own real estate right now, maybe where their office are, or they'd like to? What advice do you have for physicians?
You know, I think that for the physician groups that currently own real estate, that obviously it's a good time to sell right now, but whether they're ready to sell or not, it's a great idea to contact me or to consult with a professional, even a ways out from even when they think they might be ready to sell, because the way they can structure some leases, the way they could manage the property, a lot of other factors can mean potentially many more millions later if they do choose to monetize.
Yeah, I think that's a good advice there, because I think we see some physicians that you know, they're smart, they're successful, and like a lot of entrepreneurs and successful people, we think we can kind of do things on our own. But I think more than others, sometimes we see physicians and physician groups get into even leases that maybe weren't great for them because they didn't really have a tenant rep representing them who understands healthcare.
Right. Right.
Yeah, and you might be doing something also, you know, in your capital stack with your lending or with other tenants, and certainly if they're considering getting together and maybe developing a new building, right?
Well, if they're looking at developing a new building, that can be a fantastic wealth creation tool. A group of physicians get expert advice, build the building, occupy the building, you know, sign a well-structured long-term triple net lease with annual escalations and credit enhancements, and then monetize, and then stay as a tenant. And it's a tremendous way to make a lot of money.
It reminds me of one group that we had that was a group of doctors going in to set up leases and have a new building, the exact building they want, right where they want it. And we came down to the end, and it's like, all right, well, each of you have to put in $1 million of cash to get to do this. But then we had an investor that could take them out so they could do no cash, and the numbers were interesting because they could each get $1 million. They could move into their new building, their new lease space, designed exactly the way they wanted it, where they wanted it, and receive $1 million cash. That's a nice way to start your new practice.
It is, and I have seen both publicly traded companies, private equity, and even high net worth individuals offer up structures to large physician groups exactly like that, where they would kind of front the construction loan as long as they had a takeout upon completion. The doctors come out smelling like a rose.
Yeah, you really want to look at your alternatives out there, and you know, a lot of times it just makes sense to lease space for your practice, but at times it may be good to invest, especially I think in the healthcare field, because you typically don't want to move around a lot, right? Once your patients are used to coming to your office.
That's right.
Yeah.
And you look, and most physicians don't move very often.
Yeah. So I guess that's one thing that really makes the healthcare investment world stable, right? These tenants don't like to move around.
Exactly.
Yeah.
And one of the things that's always kind of baffled me a little bit is why cap rates for general office are sometimes a little bit lower than they are for medical office. You figure the medical office, the tenant is going to stay a much longer period of time. However, if they do move or there's some new build out that's required, typically the TI involved is significantly higher.
Yeah, and I guess it's that complication, right? The LNR, the CON,
all the moving parts,
the Stark laws, and
yes,
yeah, some of the moving parts. Well, Paul, can't let you leave us without giving us some advice for people who may want to sell office properties or specifically healthcare properties right now. Is it the time to sell, and what kind of advice would you give them?
My counsel there is that yes, right now is a great time to sell in terms of where we've seen cap rates even over the last 10 and 15 years. It's a great time to sell. As we do see interest rates rise, we are going to see cap rates rise, and commercial real estate values are going to decline to some degree. So I'm seeing even large groups that previously had long-term hold strategies are now considering selling.
Yeah. Yeah, and if you're going to own your property for 10, 20, 30 years, it doesn't really matter, right? There's no sense rushing to sell. But yeah, if you're going to sell in the next 5 to 7 years, almost seems like any sector right now. It's going to be interesting because the Fed keeps raising the rates. It's going to impact what investors want to do with their equity and the cost of debt. Right?
Well, even a lot of the large institutional investors that buy medical buildings for a living, that's what they do to provide returns to their investors. They are selling a lot. There's a lot of large portfolio transactions that have closed recently and that are currently coming to market.
Right.
So it's a good time.
Well, Paul, great information as usual. Thank you for joining us.
You bet.
And thank you for joining us there around the country or around the world. Let us know what you think. We appreciate you sharing the show, and we love to hear from you. And please join us next week. And until then, be sure you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show.